The best way to learn trading is through following examples from past trades, and also the more examples you guys look, the better it will be to understand a trading strategy. And that's why I'm actually trying to give you more examples, real life examples, of course, and just concentrate my energy more on the practical point of view than just giving you theory and some long rules that won't really help you in real life. So the next example I wanted to give you is coming from the euro dollar, one of the major and most favorite trading pairs of all traders. And actually what I'm looking for at the moment is another demand zone here. And let me just draw it out for you guys. This is a zone which has been formed in the summer of 2017, and currently the price is approaching this area. At the same time, it coincides with this nearest support level, which is formed by those lows here and formed on the 12th of or 9th of November. And if I extrapolate this line, you can see that more clearly. So basically what I'll be looking for is for the price to drop below those two levels, and again signalize us from a price action perspective. So I'll be looking for a reversal pattern, anything from a pin bar to a bullish engulfing pattern. So again, just follow the rules, and you need to actually see a fake breakout, which is going to eventually end into this price action reversal candlestick. So this would give us green light to actually go down to the lower time frames and search for a confirmation from the 4-hour chart. So as you can see, it's a lot of waiting, and in order to become consistent in this game, guys, you need to be really patient. So for example, there will be traders that will be rushing to buy around this level here where the support level is, but in my experience, even if it works in 20-30% of the time, maybe the majority of the time you might get stopped out if you place a very tight stop loss, or you don't have a confirmation from price action. That's why it's always good to actually consult with the daily, the 4-hour chart, and then try to minimize your risk and try to maximize your winners, so to speak. So what else am I seeing on this chart is, if I just zoom in slightly, not that much, and I'm trying to share with you a supply area which was formed here. Give me 1 second, guys. So you can see this big green candle, and then there was a small cluster of candles here. So this is a supply zone, which eventually, again, according to my rules, I'll be looking for a breakout above the upper range of this supply zone, and then confirmation from price action. We had this inside bar here, and as you can see, the price went down. Then it's quite common to see the price going back up to the middle of the range. In this case, it went up almost to the top of the range of this supply zone, and then currently we are in a small short trend. So having said that, the next target would be the level of 1.1200, 1.1100, and again after that I'll be looking for a bear trap pattern here. So that's quite interesting. And if we go back in time, I'll be looking for other similar scenarios. So here, for example, on the top of the chart, we have a supply area, guys, and you can see that the price actually stays within the range of this of this supply zone, but at the same time, then it broke down, and it formed this downtrend. So this wasn't something that I would have necessarily traded again, because the price didn't go above this upper range, upper boundary of this trading range here. Then if I go back in time, we're gonna see here a very small demand zone right here, and this was directly formed after the big red candle was formed, and you can see that actually price dropped just below the lower boundary of this demand area, and then it formed an inside bar, and after that the price almost skyrocketed in the short term, and then it actually went down to the upper range of this trading range, and then hesitated for a bit and continued the uptrend. That's one occasion for that gives you a good opportunity to trade. Going back in time, I like to analyze charts. That's actually a very important thing of your, should be very crucial for your daily routine. You need to try to do paper trading, try to actually look at charts and mark supply and demand areas, major support and resistance levels, and look for fake breakouts below or above those areas, and price action confirmations. That these are probably the most accurate trading setups that in my experience have made a major difference in my trading. So that's something you should definitely consider, guys. So let's go back in time, and there are actually a lot of those mini supply and demand areas, but I'll try to concentrate on some of the major ones. Okay, so for example here, guys, you have this big green candle, and so and then it was followed by a small cluster here, and what I'll be looking for again, the first moment when price goes below the lower boundary of this trading range, I'll be looking for price action confirmation, and it comes in the way of an inside bar, which led to more buyers rushing and pushing the price higher, as you can see from the chart. And once you get the habit of it, guys, it becomes quite natural to find those zones. So you should certainly try to put some emphasis into practice as opposed to just trying to read theory. So here, for example, we have another cluster which starts from this part of the chart, then goes through here, and then here again you have a supply area, and as you can see, the price just goes above it and forms a false breakout, then an inside bar, and then directly after that, next day you have a big red candle. Then the price tries a couple of times, goes up to the middle of this supply area, and then you have a very nice downtrend here, which goes to down to this support level. And that's why it's very important for you to understand how to mark the support and resistance levels on your chart as well, because this will actually help you over the long term to decide where to take profits of, and to make your entries more precise.